When I was a kid, I had a really bad memory, and it was kind of funny because I think people thought I was a little, you know, I just forgot things really easily. But then I got this book, and it's going to sound really corny, called Instant Memory. And it's like a blue book. It was like 25 pages. And the whole thing was, your brain never forgets anything. Remind yourself you never forget. If you're ever in a test and you don't remember anything, just remember it's in your brain somewhere. And I read that book in 8th grade, and believe it or not, I after that had a really good memory.
Really? Was it like self-affirmation? Where you
Yeah, I think it's just proof that everything's about self-actualization. Like if you're determined to be a scholar on some subject, you can just set your mind to it. And I think I was sincerely interested in having a good memory, and that book was the catalyst.
One of the core reasons why I really wanted you to come today is because I feel like Tier 1 media is just putting extracts of you out there. And unfortunately, with the power of media these days, it creates these preconceived beliefs among people. And some people call it Bitcoin bull, Bitcoin maximalist. I find you to not be that much out there. Generally speaking, how would you define yourself in terms of your position towards Bitcoin and other asset classes?
On mainstream media, everything's a soundbite, and I don't determine the agenda. But yes, I would say we're known, and our service and our research is really built for our clients only. So that's who who really matter to what we do, and it's primarily thematic. So we look at things that we say you can see a mile away. So that's generational issues, things that will take 10, 20 years to play out, because those are the really important sort of alpha opportunities. And for me, crypto is clearly one of these. There's a real usefulness in terms of how it's decentralizing trust and probably re-architecting really the financial system. There's a whole generational adoption angle to this. And I think it's probably one of the first real new asset classes to emerge really since volatility or credit default swaps. I think digital assets is going to be an authentic institutional asset class.
Imagine my Aunt Susie or my niece Georgie, and they want to start investing. They've never invested before. You have more than 25 years of analyzing different markets and different asset classes. What would be your golden tips for someone who has absolutely no clue in how to invest, what to invest in?
Well, to start with, crypto is a highly hyper volatile asset. It's very volatile. We've seen it, 4 times it's fallen 90%. Every time previously it's recovered, which means crypto should be 1% to 2% of someone's portfolio, especially if they're treating it as an asset class. The second is, I think you should, the easiest thing is to stick with winners. And, Bitcoin is a 10-year-old blockchain, has never had a fraudulent entry on its blockchain, and it's dominant. So I think it's just easiest to invest in Bitcoin.
So you were talking about generational gaps, and that's something that's absolutely fascinating in your research. Have you noticed any trends when it comes to baby boomers, Generation X, YZ, among your family, maybe cousins, or differences?
Yeah, well, there's some very obvious ones. One thing that we can all easily observe is that each generation is a lot more digital. So someone who's a millennial today, they'll be surprised if their grandparents are smartphone users or really active. Generation X, was actually the cell phone generation. But I think, we're seeing each generation increasingly exist and actually live a more native digital life. And it changes their social connections. It changes what they consider to be valuable. Digitally unique things weren't important to me as a Generation Xer, but it's pretty important to a gamer who's a millennial or a Gen Y. So yes, very big changes. The blockchain and crypto really replaces trust from the traditional financial system. So if you want to say, how does cryptocurrencies capture value, or how are you going to make money? It's really any entity that can act as that intermediary that replaces trust in financial systems. And an example of this, for instance, is, I don't know if you guys saw the Block article this week about MoneyGram CEO, but he talked about how he thinks digital currencies and digital assets are going to become the primary pair to do remittances overseas. That makes a lot of sense, because today any money transmitter has to have banking on both sides and tie up a lot of working capital, and they stand in on trust. how much easier is it to just send Bitcoin overseas? The second is productivity, that as you replace these former legacy centers of trust, you're also replacing a workforce. 40% of the cost of any banking system is the compensation paid to employees, so there's a lot of money saved. It also means that companies like JPMorgan could have 90% fewer employees in the future and still make the same money. The third is that working capital will get optimized. I don't think most people realize this, but today about 14% of all global GDP is tied up as cash. So companies, on average, have to keep about $11 trillion of cash just to be in business. That's a huge amount of productivity wasted. And of course, store value.
Dear crypto community and blockchain buddies across the globe, welcome back to Cryptonites, the no BS blockchain built with the community and for the community. And once again, we have a returning guest here, no one else than Tom Lee from Fundstrat. A pleasure to have you again, my friend.
Yeah, thanks.
How are you doing?
Good. I'm missing the burning log.
Yeah, I know. It's not as romantic as the previous. Yeah. But just to follow up on the previous interview, you were telling us about the instant memory. I couldn't find that book, Tom. I'm so sad. Where do you know where I can find a copy of that book?
Well, if I was still in Michigan, I could just go to my room and grab the copy off the shelf, at my parents' house. But
I'm gonna come knocking on the door one
of these days. Come to Michigan.
Awesome. So speaking of books, I would love to ask you if you had any other books in your life that influenced you that you would suggest maybe your children to read to become a better person. And are there any other?
Well, I probably wouldn't recommend instant memory to my kids. They probably already have good memories. But, I'd say the books that meant a lot to me, in growing up really were more about character and personal character. So, some books that I think people, I really enjoyed growing up were like things like, there's this book series called The Great Brain, which is about this kid that, solved a lot of things. But, before going to college, I'd say my two favorite authors, one was Woody Allen. And I think one of my favorite books written by him is Without Feathers. I thought it was so funny when I read it, but I read it recently and it's not nearly as funny as it was back then. Part of it is, humor's changed. And the other author I really liked is Flannery O'Connor. And she's a fiction writer. But, were there any nonfiction books I read that really changed my life? Not really, except, the Bible.
That makes a lot of sense. Thank you for sharing that.
Yeah.
I wanted to ask you, so with Fundstrat, you guys have so much research, so many statistics, so much data. And I remember when you showed me one of the samples at the previous meetup, you said this is just a fraction of what we provide to our clients. In terms of Bitcoin itself, what would you say recently are some of your favorite data sets or statistics that support Bitcoin? Do you have any?
There's a lot. I think that the quality of the data and the providers and vendors of data are, they're really growing and it's becoming a lot more sophisticated. And I do think it's going to help, people understand what's happening on the blockchain and how coins are moving. But to me, when I look at equity markets and all the tools people have developed for stocks, at the end of the day, simpler is better. And, with the equity world, it all comes down to cash flow and simple technical measures. I think that the same is very true in crypto, that at the end of the day, the real driver for value for Bitcoin is whether or not it's getting more useful. And that really means adoption. And from a market's perspective, I think the most important thing to watch, it's overly simple, is just the 200-day moving average. If you look at Bitcoin's price over the last 10 years, whenever it's been above its 200-day moving average, its average 6-month gain is 200%, and it's up 80% of the time. When it's below its 200-day moving average, Bitcoin has 1/10 the forward return. So the biggest thing that happened this year, I know it sounds overly simple, is that Bitcoin actually crossed above its 200-day moving average. And of course, why does that matter? Well, this dark red line is the Bitcoin 200-week moving average, and then you see the 200-day. Every time you've crossed above its 200-day day moving average, it's the start of a new bull market. So I do think that what you have to keep in mind is Bitcoin's old high is not going to be the limit of where Bitcoin trades to.
I remember one of your slides, you have a slide about the FANG stocks, and you were saying that if you missed, choosing the right stock is always extremely difficult, and you talk about diversification of portfolios. If you don't mind telling us, or to all the people watching out there, what is diversifying a portfolio and why is it important, and any things that you can help increase financial literacy?
Yeah, I mean, I think crypto in general should be someone's sort of bet on a portion of the future. I think people should put 2% into cryptocurrencies, including Bitcoin. And how they do that is really their choice. We think a large piece of that should be Bitcoin. I mean, at a minimum, market weighted, so half of anyone's choice should be Bitcoin. But one of the things we point out is, if someone decided they wanted to own 100 cryptocurrencies, what we saw happening with consumer stocks in the 80s or with internet stocks in the 90s, the late 90s, is that portfolio of 100 stocks, if crypto does as well as internet did in the consumer, they don't have to pick the right currencies and their total return will outperform the overall crypto market or equities.
So you were talking about 2% of portfolio perhaps in Bitcoin, and then within that 2%, maybe half would be Bitcoin itself rather than cryptocurrencies. In terms of diversification, if someone is just starting to build their own portfolio, let's say a youngster, a millennial, how would you recommend they build their portfolio?
Yeah, when people look at savings, it's primarily going to be traditional financial instruments, stocks, bonds, some commodities, and as people get older, they have they add different pieces to their mix. I don't think real estate in general is really an asset. If you own a house, it's a liability because you're living in it.
That's true, yeah.
And very few things are truly collectible. So I think stocks, bonds, commodities, and then cryptocurrency should be 2%. Turns out that consumer stocks were monsters. So even though there was an equity boom, there was an even bigger boom in consumer stocks. The top 7 best performing consumer stocks turned $1,000 into 1.2 million. Okay? What does that mean? Let's just say you were a terrible stock picker and you bought 100 consumer stocks in 1982. You could have been so bad that 93% of your picks would go to zero, and on average, only 50% do. And you'd still have a 12x return. You would have crushed the S&P just by buying consumer stocks and being a bad stock picker. Similarly, internet was the same trade. So Gen X was 26.5 in 1997. Boomers were 26.5 in 1980. And if you bought 100 internet stocks in 1997, 96% would have gone to zero, but you still had a 16x return, and you would have beat the S&P 500. So again, the point is, if you get the demographic trade right, you can be a terrible stock picker. And again, in crypto, I think Bitcoin's the way to go, but if you were to buy a basket of crypto, this is the same trade that we think is being set up.
There's one thing that we were talking about last time, and I know there's no data to back this up, but will Bitcoin thrive after another recession or financial crisis? I know there's no perfect answer, there's no magic ball, but do you see this because the first financial crisis came from the private sector, the second one potentially by both private public sectors? Do you think this is good for Bitcoin itself, or it's too hard to say?
Yeah, it's a good question. Well, one, we don't know if there is going to be another financial crisis, right? I mean, no one knows what a recession will look like until it starts happening. But, in general, I think Bitcoin remains an uncorrelated exposure to financial markets. Even now, Bitcoin has negative correlation to stocks, meaning as stocks fall, generally Bitcoin rises. Now, Bitcoin doesn't have to fall when stocks go up, but when stocks are falling, Bitcoin's negatively correlated. And I think in the future, if a progressive agenda develops globally, progressive meaning governments want to run deficits and borrow money and print money, that's not going to be strong money in the future. That's weak money, and that's really bullish for Bitcoin.
That's really, really good points. And speaking of Bitcoin, there's another question that I had, which I think for the beginners or millennials who want to start investing, they're always confused on whether I should invest or trade. And obviously there are pros and cons to both worlds. But for example, Warren Buffett, as you know, he made that bet against the hedge funds with the S&P 500 that outperformed all hedge funds after the crisis. And there was also a report saying that 80% of professional traders in the US actually tend to lose money because it's not obviously an easy game. What is your advice? Would you recommend investing or trading? Do you have preferences or?
Yeah, I mean, I think some people are probably skilled traders. I'm not one of them. So, we recommend people have an allocation to crypto and essentially hodl it. We've published many times our analysis showing that Bitcoin makes all of its gains within 10 days in any single year. And if you exclude the 10 best days, Bitcoin's down 25% a year on average. So, if someone had a crystal ball and only owned it for the 10 good days, they'd be a gajillionaire many times over, better than owning Bitcoin. But I think it's just simpler to own Bitcoin. I'm not a big believer in trying to be a timer of markets because of this chart. This is the top 10 days, okay? So if you look at every year since 2013, the light blue line represents the return of Bitcoin on their 10 best days. And the dark blue line is the return of Bitcoin the other 355 days. If you didn't own Bitcoin for their 10 best days in any year, you lost 25% a year. So think about that. Bitcoin makes all of its returns in just 10 days.
I wanted to ask you as well in terms of utility tokens and security tokens. These days, the security token, obviously, since last year is a big hype. You know the traditional world so well, institutional players. Do you really see them moving towards a token or just staying in their ways of, trading securities in traditional markets?
I don't know.
It's a difficult question.
Yeah, I don't know. We don't know the future, right? I think traditional financial institutions like low cost. So to the extent that any future method of acquiring assets is lower cost, it's going to attract capital. But institutions really prefer to buy things that grow and have upside to price. So I think cryptocurrencies are attractive to the extent that it's going to emerge as an asset class.
That makes a lot of sense. And one last question with regards to Facebook. As you know, this is on every headline, the global coin, and how it may be a challenger to Bitcoin. Obviously, there are pros and cons to everything, but how do you see this phenomenon playing? Is it good for cryptocurrency, that Facebook?
I think, I think it's only good comes from Facebook launching a cryptocurrency. I think it validates a lot of the efforts and the concept of, decentralized finance and blockchain and digital assets. And we'll have to see what the actual operating, Facebook coin looks like, but it's early. I want to tell you why I think the Bitcoin ETF is a positive, okay, unequivocally positive, but I just don't think it's going to happen in the next few years. Number one, as you guys all know, there's a huge regulatory hurdle that the SEC is institutionally somewhat hostile to crypto. Part of it has to do with the lack of transparency in pricing, and the previous speaker really did a good job of explaining, the issues with volume and reporting and the gaming of pricing. But I think there's a secondary issue. The Bitcoin ETF might be too much of a good thing. Okay, if you look at the top 10 ETF launches, even the top 20 ETF launches, the average is $1 billion of demand in the first year. Okay, that's $20 million a week. With the halvening taking place next year, Bitcoin's daily supply is going to be $5 million. That means that if the ETF were to launch for Bitcoin, you're talking about $20 million a week of demand, almost $5 million a day, which would buy every single block reward that a miner receives. Think about that for a moment. If Bitcoin has equilibrium today, and then you get a new entity that's buying every single block that's coming from a miner, what do you guys think will happen to the price of Bitcoin? Look, it's game theory. Every miner is going to withdraw supply. Everybody who holds Bitcoin isn't going to sell it, and you've got $5-6 million a day of ETF demand. I think there's a chance that Bitcoin's price has a massive parabolic move because of an ETF. So I think that Bitcoin's price and the market needs to get a lot larger before we have an ETF. Otherwise, Bitcoin's price would potentially go ballistic on an ETF.
I was blown away by all the generational stats that you provide in your reports. I find it fascinating that you were able to find correlation with generations and market booms and crises and crashes. When was it again? You said that the millennials will peak in
2038.
2038. So by then, we'll hopefully see mass adoption, or
yeah, should be a good 20 years, right?
Should be a good 20 years. All right. Thank you so much,
Great.
Tom, for all your time. It was awesome having you.
Yeah,
and definitely, guys, don't forget to watch Tom's talk here at the Crypto Compare Digital Asset Summit. There's some really valuable information. I couldn't stress it more. There's so much data that you want to watch it over and over and over again. And hopefully have you again soon, and next time you're in London, Tom.
Great.
Thank you so much.
Yeah, thanks. Demographics explains markets better than almost anything else in the world. In fact, I can tell you that if you just use demographics solely, you could predict stock market tops since 1870 with a 40-year lead time, and you'd be right within 1 year every time. So what do I mean by that? Well, these are the 6 living generations in the United States. Greatest generation, silent generation, baby boomers, Gen X, millennials, and Gen Z. Most people in this room and most people who do crypto are millennials. On the right side, I list the year that the total population of each generation peaked. It's not the same as births because there's immigration, and it's not exactly 20 years apart because there's wars and everything. But take note of the dates: 1930, 74, 99, 2018. Well, see, take a look at this chart. This is the stock market since 1870, and I marked with columns the peak of every generation. It's called every major market top. So think about that. You could have predicted every major top, every major crash with a 40-year lead time, just using births. And interestingly, we published this last summer. 2018 was the peak of Generation X. Well, what happened in 2018? 97% of global stock markets around the world had a negative return, the worst since 1900. So last year, even though the US only fell 20%, it was essentially a global crash last year. Now here's what's good. The good news, if you guys own equities, if our analysis is correct, the next major bear market's not till 2038. So, we're in a bull market for stocks for 20 more years.